Thank you, everyone, for coming to what is probably the most technical markets panel, but probably the one that you'll learn the most, or at least I hope so. I'm here joined by 3 of the premier market makers in the space. You guys can do quick intros, and I'll do mine first. So I run Split Capital. It's a hedge fund. We focus primarily on just buying and selling digital assets across the board.
Yeah. Hi, everyone. I'm Evgeny, CEO of Intramute. One of the largest prop trading firms in the space. We're doing pretty much everything from CFI to DeFi to OTC.
Yeah, he said technical, and I think some people started getting scared. They're like, do I need a calculator? Like, what am I going to have to do? I'm Jordi, founder of Selene Capital. Very much similar. We're active participants in all crypto markets.
Hi, everyone. My name is Annabelle Huang, managing partner of Amber Group. Similarly, also have the market-making business, both on centralized venues and on-chain. Outside of that, we also have a digital wealth management service as well.
Awesome. Amazing. So I wanted to ask, people don't really grow up wanting to become liquidity providers or market makers. It's not many boys and girls' dreams to necessarily do this. How did you guys get into the space to begin with?
Yeah, for me specifically, I basically studied finance for my master, and there were a bunch of those books, like Liar's Poker, Barbarians at the Gate, basically about finance. And I guess one of the central themes for a lot of them is you have this protagonist, like, I don't know, Liar's Poker, for example. Like, you have this protagonist, he joins a bank, he's like a nobody, he doesn't know what trading is, and then he learns his way, he makes a lot of money, and then he gets disenchanted in the whole thing. Like, he makes too much, and it's all like, I don't know, it's not worth it, it destroys my soul, whatever. And I was basically, I'm curious, like, let me try this. That's it.
Yeah, I mean, I think it is human nature to have to take risks, take good risks, learn. Some people will not learn, and they'll kind of fall off. And as humans, we're trying to be the ones that evolutionarily make it. So for me, it's always been, having good judgment, good risk-reward decision-making. And how do you become a crypto market maker? I mean, I think very normal path. We become traders in traditional finance. You do that for some years, and then you see that there's a very exciting new market that is very inefficient and has a lot of, I guess we saw the potential, so here we are.
Yeah, for me, similar story as well. Studying math in undergrad and felt like, it's either maybe going to prop trading or Wall Street, which is more like sell-side market-making type roles. And for me, I think wanted to, get involved in a bigger platform, which is why I went into Wall Street. And afterwards, actually started crypto, building the first generation DEX on-chain. So outside of the infrastructure struggles, actually the biggest thing was there's 0 market makers who are even willing to trade on chain. There's liquidity begets liquidity, and back then, the most daily turnover we did was probably $100K, right? So we have to pay some of this European-based MMs a lot of tokens for them to even trade. And at some point, I decided to move to Hong Kong, and then this is where Amber came about. Might as well, leverage the past trading experience and build a market maker trading desk that are willing to start looking more in terms of DeFi. And obviously, we've grown a lot in the last 6 years.
Awesome. So I'm going to ask the question that I think everyone's wondering. New token launches have been down only pretty much across the board. Why is this the case? We'll start with Annabelle, maybe.
Putting me in the hot seat. I think, first of all, obviously, there is the high FDV. Let's not talk about the flow, right? Even just high FDV. And in this market, sure, we had initial bull run, but that's mostly isolated to the institutional allocations to Bitcoin ETF, right? Not even that much to Ethereum ETFs. And that is very separate to liquidity within the more crypto-native markets. So if we look at the multiple launches that are $1 billion plus, it's just not that much retail demand and buying power to continue to prop the market or prop the price up, right? So I think this is also why there's some reflection going on, and this anti-high FDV low flow. It's because we're seeing this model doesn't work.
I mean, I think it's a great and very important question, very pertinent to this year, also previous years. And when we talk about how to navigate crypto capital markets, it's such a big thing to be allocating capital in the wrong place, wrong assets. And we were talking backstage how like a lot of people have washed out over the years because of the volatility and excesses. And you're on top of the world, and then there's like a small tail risk that you completely blow up. And except for the one cockroach that we were mentioning backstage, like most people cannot navigate for many years. And the FTV thing, look, the reality is most of the crypto exchanges, they get customers based on TGEs. People love that first ICO moment because it has, this potential. It's all, maybe this is the one that's going to be the next Ethereum. And, we all know how the ICO went for Ethereum in terms of the investors. They've done extremely well. And entire exchanges are relying on token listings. Unfortunately, in terms of your question, all the demand happens on day one because that's kind of like where all the hype is. And the projects themselves spend a lot of money on creating hype on day one. They want to get all their KOLs, everybody. And unfortunately, you're usually buying the top unless, it's one of those underhyped projects that goes up. What's good for people investing is not necessarily what's good for the project. So there's a little bit of disconnect there. And I think exchanges finally, for the first time, are realizing that if their users lose a lot of money, it's not good for them either. Their kind of wallets get drained. We see a lot of people disappear halfway through the cycle because they haven't been doing well, and we got to fix it. How do we fix it, Evgeny?
No, I think one thing that I would add is there is a pretty significant information asymmetry between basically like professional investors, like venture funds, whatever, and all these retail people who go to try to buy those tokens during TG. Like they are not necessarily aware that what those venture funds or like other investors paid during during Series A or even seed is like they're making 10x, 100x in certain cases, and obviously they're going to sell at some point. If there are perps being listed, they're going to sell the perps to hedge at least some. And it's just not very evident. And so one way to solve it is, well, to make it all very transparent what the entry price was for every single participant. In other ways, I think we should also legitimize in a lot of ways to basically allow to transfer those positions from venture funds to maybe, later stage funds, for example, who can, give those venture funds, 5x exit, and now they have a higher entry price, which means that at TGs there will be much less selling pressure. Like all those things, yeah, we should basically work as an industry to normalize a lot more, both on the transparency disclosure side, but also on normalizing people selling before TG as well.
Yeah, and I want to go back to something you mentioned, Jordi. You talked about, what seems like a positive thing for the project day one to launch as high as possible, raise like, 50, 100, $150 million in capital on token sales, and then they kind of go back a couple months later and they're like, why do we not have any users? Why does our community hate us? How would you kind of navigate that relationship? Because you guys do engage, a lot of these projects. How would you navigate that relationship with a project to say, maybe this is too high of a price day one. Can we renegotiate? Is that even a thing, or is this not a conversation that you guys have?
I mean, most projects, because everything in crypto, we're not looking at DCF analysis. There's no like consistent cash flow. It's not the same as an equity. Everything is relative basis. So every founder I talk to just looks at their comparables and they want to list in that FTV range. So, an L1 has their FTV range, and everybody wants to be an L1 now because there is a premium to being a blockchain instead of being an app. Unfortunately, like we've seen this over and over again. You mentioned token sales. I think a lot of projects don't even do token sales. Some do, but a lot of them are. The more that their FTV is high, they can do partnerships, and they can say, hey, 5 bips of my token, list me here, put me here,
right.
And people will take them seriously. So they try to use it as a growth leverage. that works for a while, but it eventually comes to haunt you because the tokens eventually create a negative sentiment from price going down. This has not been solved. We're in the middle of, as Annabelle called it, like a lot of reflection collectively now.
Right. Evgeny, Annabelle, do you guys have any views on this?
I think we'll see a lot of more experimentation in general on how protocols interact with early users, how they do airdrops, how they do whatever points, like everything else. Because I think with, like again, all those like airdrops and points, they create a whole layer of token holders with zero entry cost, or like sort of zero entry cost, because a lot of them are farming with capital, so there is some cost involved. But truth is, they still they get tokens for free, and so they're pretty much incentivized to sell them if they don't care about long-term prospects. So you need to be more creative. You need to be, well, we need to come up with more creative solutions here.
Yeah.
I actually wanted to touch on the sustainability part, right? The business models. No VCs, well, at least most VCs don't really look at that. Like, they don't really look at, are you making revenue, right? What's the business model? I think there is a change happening now where VCs realizing that, okay, we need to actually invest in businesses that have longer term prospects as opposed to, just initial airdrop. But I do think, I imagine as a young founder, you're looking at, okay, all the VCs investing into fancy narratives. You don't really need to worry about, creating a sustainable business model, and that's sort of the game so far, right? And so to that point, I think it's not even, it doesn't even just, it's not just exchanges or project themselves, but also VCs who are allocating early, supporting these projects. Which direction are they really steering towards? And then also on the private market capture versus public market capture, right? We're seeing an imbalance. Is that going to change? And ultimately, it's all about sustainability in the long term and how price can, stabilize, right?
Right. I think the audience should really appreciate how big of a treat it is to get, actual market makers on a panel and divulge some of their secrets. So I'm very appreciative of this, and want to really thank you guys for this. But another kind of growing theme has been on this whole idea of high FDV, low float, new token launches have been negative. Exchanges have now kind of pivoted, instead of doing maybe more of the legitimate projects that have real backers on the VC side, to doing a lot of questionable, maybe meme coin, launches nowadays, where even end users are kind of scratching their heads, thinking like, what are they really doing with these new launches? How much do you guys, kind of participate in this world of meme coin market making, and what are your own views with, with the strategy that the exchanges are running?
I mean, I think as financial products, they are not financial products. So we had GameStop, and I think a lot of people got excited about trading, Robinhood. Maybe that's a good thing in a way. It brought a lot of people into investing markets from the mainstream, and maybe that's good for people that start investing and not having their fiat DBS. So I'm supportive of that. But we saw Binance, for example, list all kinds of interesting meme coins a couple days ago, and then you read what they're writing about it, and they're saying, we listed this 15 million market cap coin because we understand there's some anti-Wall Street sentiment and people want to bet on this stuff. But like, the reality is the crypto users are very different than the exchanges. The exchange people are running a business. They're business people. They're BD people. They're product people. They're not, most of them, maybe Justin Sun excluded, are not on crypto Twitter all day, like understanding the culture and what people are actually doing. They're literally just KPI, like, what's our KPIs? Right. And then they realize everyone's losing money. Maybe let's do low float. Like the high float, low FTV, meme coins. I don't think it ends well. I'm not personally sure that listing Baby Doge 1,000, because there's so many Baby Doge tokens that you need to list the one where one contract is like 1 million tokens or something. I'm not sure where it gets us, but I think the meme coin thing. I mean, just to like not be totally bashing meme coins, I do think that there's a way to use that. Attention from meme coins and the simplicity. Because why does everybody like meme coins? I do a meme coin panel. I do one in Dubai. Full house. Everybody wants to hear about meme coins. Hear Ansem talk about WIF. Like, it was packed. So I think the reason is people like the simplicity, like there's an animal, it's very easy for the brain, and then you make a financial instrument, you attach it to the animal. It's very exciting. I do think there's a way to create real products out of that. I've been dabbling in that myself as an experiment. So hopefully, like, that will evolve and we'll have something better. Yeah.
Awesome. Do you guys have any views, Annabelle, Evgeny?
Yeah, I think like it's not even anti-Wall Street or whatever. Like it's anti the previous meta, which is like all those complex tokens with that complex models with like PhDs at the head and like all those super smart people and I don't know.
Intersubjective tokens.
Whatever, like all those like new terms that people have to learn, and all those tokens are basically down only. And this is like opposite, I guess. That's what attracts people. But yeah, do we partake? Yes, we do trade meme coins, but yeah, for us it's just another token basically. And if there are volumes, yeah, it's definitely interesting for any prop trading firm to trade them.
Right.
Yeah, no, I think it's definitely in response to the high FDV low flow, which is why they're going complete 180 on this. I think there's one thing to know. I think we talked about this a little bit earlier as well. Is sure, meme coins are mostly a fair launch or quote unquote fair launch and decentralized ownership, but in reality, is that the case? There's still a lot of insider trading happening, right? So yeah, that's I think even for retail investors or for listing side, that's something you need to look into, and not just list meme coins for the sake of that.
Yeah, it seems like a constant theme in crypto is this idea didn't work out, so instead of iterating on this idea, let's burn it, talk shit about it for ages, never look at it again, and let's move 180 in the other direction, which I think is a constant mistake. But we can talk about that forever, basically. I wanted to, we talked a lot about centralized exchanges. Now there's been a growing trend of these perp dexes, right, or decentralized exchanges that have perpetual swaps that are, really popular products, and Hyperliquid in particular, right? How do you guys view this from more of a, prop trading, market making kind of perspective? Does this seem like the future of crypto going forward, or does it seem like maybe, we've heard a lot about, new perp dex launches being very hyped and maybe not really garnering that sort of market share, across the space, right? Does Hyperliquid seem like it's going to kind of take a lot of that moat over time, Evgeny?
No, I mean like where Hyperliquid is, like they're not that different from like a lot of sort of predecessors and existing competitors. Like it's basically still very much a hybrid exchange. They're like not fully decentralized. They run their own validators. Like it's still not like your perfect decentralized exchange. It's not like your perfect whatever crazy experiment UIDX before is doing, for example. But I think where they really shot initially was pre-launch markets.
Right.
And I think that's ultimately the answer to like any new innovation in crypto starts with like something that not so many people were doing before, or maybe it's like you improve it. Like these pre-launch markets, I don't know, FTX had pre-launch markets, and actually people appreciated FTX for it. Then they stopped doing it because they grew too big to do it, and then they blew up. But I think that's how Hyperliquid initially got pretty hyped, in a way. And now there is everything, and yeah, now they're growing into this platform where you can trade everything ultimately. But they need to continue innovate. They need to continue adding new features, adding new things. Otherwise, like there will be a new Hyperliquid with some new novel feature, maybe social trading or some friend tech loan. I don't know, like something. Like that's the thing. You never know what comes next.
Yeah, I would say I have a lot of respect for Jeff, right? And I think the way that they bootstrapped it is very different from how the other prop dexes did it. They took no VC money, and actually, in result, I think created a lot of FOMO for bigger institutions want to get exposure to their token. You have to just trade, right, and to form the points. And then, obviously, given that they're a hybrid model, your user experience is better than the fully decentralized competitors, a little bit more similar to a centralized exchange. So people are happy to use it. And ultimately, I think the HLP vault, right, where they actually opened, essentially them running their own internal market maker, but willing to share that upside or P&L with other LPs or users, I think is what got them where they are today. But ultimately, like Evgeny said, how do you be sustainable, right? After all the seasons of points and farming, how do you keep adding new features so that users stay? And yeah, so again, that's the question for every single project out there.
I think all DEXs are still crypto native products, right? Like the number of users is really not that high. If you compare it to Binance or OKX, Bybit, it's still like 1,000th of the number of users. Now it is bigger users, they're more active whales and serious traders, but they don't have the fiat on-ramp, off-ramp. There's a ton of stuff to do, mobile experience, like all these things. There's a lot of things to get right. I think order books are the right format. I thought GMX last cycle wasn't really going to sustain because it's not really a sustainable model having kind of an Oracle based. So I think the user experience is one, like liquidity. There has to be enough liquidity there. And we saw DYDX did a good job initially. Now it's a little bit kind of tougher. We'll see if there's a way to sustainably incentivize liquidity, but without like having too many tokens go out. So we'll get there. I know every year we're saying DEXs are going to take over SEXs, and even CZ was saying that one day Binance is going to be all decentralized, but maybe next year, guys. We'll see you here again next year and see.
But directionally, would you guys say that they're taking the right steps? I mean, it seems like there's a lot of angst in a way, right, towards the new token launch or maybe the new points farming campaign. Does it seem like Hyperliquid or other perp DEXs are taking the right steps going forward from a market-making perspective, right, or garnering liquidity and attention, or does it kind of just die out in the next couple of months?
We'll have to see. I think it's very hard to keep executing, making the decisions, but the good thing about the space is that it does attract some of the smartest people, some of the best builders, very talented. So if they have good judgment and keep executing, maybe we'll get there. But like I said, I think most centralized exchanges are still relying on people wanting to make it and kind of have that 100x experience. And a lot of the industry is still being driven by that. I mean, even just getting outside and going across some of the booths, you can see that a lot of the marketing is still kind of centered around this YOLO, like moonshot kind of
make it all back
experience.
in one trade. Yeah.
All back plus some. Yeah.
No, I would say the challenge for DEXs primarily is that they don't have a lot of mechanisms that centralized exchanges do have. Like they cannot give more throughput to market makers, they cannot give lines of credit to market makers, they cannot give better fee schedules to market makers, all those things that centralized exchanges frequently do just to improve liquidity. So yes, they have to rely on something like more crypto native, like basically given tokens or something like this. They probably have to come up with more mechanisms ultimately, but yeah, that's the problem. They don't have as much ammunition as centralized exchanges do.
And we were discussing backstage, like at the same time, you have the very regulated Coinbase style where it's just like massive tanker, but it moves so slowly, and it's eventually going to get there. Eventually they're going to have liquid perp markets, or eventually going to open up to more countries. And it's up to the DEXs and these like entrepreneurs to seize the market share and grow it and kind of establish a moat, because eventually like that stuff will happen. I think Coinbase has shown over the years that they eventually get there.
Yeah, I think this is a big consideration for people, right? Like, I've been thinking about this problem quite a bit. How much do we move on chain versus if the space is actually going to get institutional adoption, then liquidity should be coming to markets across the board, right? I really appreciate that tangent, actually. Moving from there, I wanted to talk about kind of the roles that each one of your firms plays, right? I think in a traditional sense, we would never be doing this, right? There's no jump trading, tower research panels that are happening globally, right? So I appreciate the fact that we have more transparency, more kind of conversation with market makers here. But what are you guys kind of building out that it seems like the future of market making or trading within crypto? I believe all three of you have like some sort of incubation within your firms that is trying to build product, not just continue to prop trade. This is the case, right?
Yeah, I mean, of course, Tower and Jump are not going to talk too much about what they do, although you do have Citadel now strangely sending out their CEO to all kinds of panels. Maybe they're some kind of ICO coming or something. I don't know. But I mean, we just saw yesterday, Evgeny, maybe you can tell us. It looks like you guys are doing some election coins, Kamala Trump coins. That's very cool. Love to hear maybe something about that.
Yeah, no, like in general, yeah. I mean, to start with that, it's really interesting for us to experiment in the space, and it's really basically our kind of like philosophy and strategy in general. We want to, as kind of like, I don't know, our internal mantra as well, we want to support decentralization in the widest sense of the word. And that means that, yeah, we want to see many blockchains, we want to see many DEXs, we want to see a lot more competition in general. And yeah, somewhat strangely, we even want to see more competition in market making space as well, because a lot of protocols that we incubate and a lot of products that we will be building going forward, like we built Bebop, for example, and incubated it, and now it's its own chain, which is basically, yeah, competitor to OneInch, competitor to Uniswap X. But we don't want to be the only market makers there. We want like Selenium to market make on Bebop. We want Ember to market make on Bebop. We want everyone to market make there.
Do you want DWF to market make on Bebop?
Yes.
All right, yeah. There we go, Andre. If you're out there, market make on Bebop.
It's the same as with protocols that's out there. Like, so basically what we released yesterday is basically completely open smart contracts that anyone can interact with. Anyone basically can mint Harris and Trump tokens, and basically anyone can use DEXs or centralized exchanges, at least those tokens, to make a bet on them. And the way we did it, we first thought, okay, maybe we'll do the smart contract, maybe we'll like introduce some fees inside, like maybe minting fees, maybe transfer fees, but then ultimately we thought, okay, like, what if we just do it as a, I don't know, almost like a community service? We just release it. Anyone can list it, anyone can market make it, anyone can do whatever they want, and just do it as an experiment to see, if it picks up, because currently we only have Polymarket, and we love Polymarket. I think it's a really amazing product, but I think it could use more competition on other chains primarily. And like another thing, we did get a lot of demand from centralized exchanges to actually look at those like election kind of like tokens, for example, to basically for their customers to get exposure there. So it's basically also giving centralized exchanges a chance to participate on this.
I mean, we like to be very crypto native. I think building and talking to builders all day is my favorite part of my job. I don't know about you guys. I know you talk to a lot of founders, Annabelle. It's just good to see like all the creative energy, and we do like to participate, sometimes advise, sometimes even help incubate something. And that's really like the differentiator between like a Jane Street or a Citadel, who they have all the all the quants, all the math, all the kind of systems, and a ton of money that they make billions every year in TradFi. They can invest and kind of beat our capex by like a multiple if they wanted to. I think our edge is we're kind of here early. We're on the ground. We can really sort of establish enough of an understanding of the pipes before they inevitably start expanding from ETFs into other markets. And for Selene specifically, we like to make sure we have the technology that these guys have, so we have the same level of developers and same level of infrastructure, but we can really kind of get much more native into the weeds. So that's why I like incubating as well.
Yeah, and for Amber, actually, I think a lot of people didn't know that we have a pretty big on-chain engineering or blockchain engineering team, and also security audit team as well, mostly just for our internal audits when we deploy on-chain. But now we are also helping a lot of our portfolio companies to give them free audits, essentially. And we just launched the Ember Accelerator to also utilize the engineering team and resource that we have to help incubate or accelerate other projects. So even for some perp dexes, right, they come from the more centralized exchange background, not too familiar with the underlying tech stack, and that's where we step in and then really can help. And to Jordy's point, right, working with founders, helping them throughout the life cycle of the project is what energized me myself also, like from venture backing them early on to when they do need liquidity or treasury management after they list, obviously any other OTC needs, servicing their investors as well, and or building, incubating projects on top of what they're building. I think that's why we're in the same boat, right? We're not just a super specialized market maker in a space. We're actually here to build this pie bigger together.
We've talked a lot about, the sort of transparency that we have within crypto from the market making side, but it still seems like we're far away from having a pretty honest conversation about transparency between market making services and kind of what happens in this shadowy cabal in the back room. We were literally in the back room over there with the shadowy cabal. But being more serious, right? How do we bring more transparency to market making? Or is this just not something that anyone is really interested in doing?
I think there is a difference between, basically just like any market participants, there are certain things that we want to not be transparent. Ideally, we don't want our wallets to be doxed. Ideally, we don't want our, withdrawals, deposit addresses on Sexes being doxed. It still happens, some of them at least. And sometimes we get some of our wallets are just associated with us. Sometimes somebody else's wallets associated with us. Okay, that's just life. But there are things that should be transparent, I think. I personally think, there are all those deals that the prop trading firms have with protocols to market make their tokens. I think it would make total sense to make at least certain parts of those deals more transparent. But important part of it is kind of two parties. There are two parties to any agreement, right? So it's token protocol and the market maker. On our
I would say
side,
3 parties, right? On the exchange side too.
Exchange, in a token market making agreement, there are just 2 parties. There are no exchanges there. The exchanges are mentioned, but they are not party to this agreement.
Well, they have to list it, right?
Yeah, but it happens further down the line usually.
Sure.
Yeah. If there is exchange listing contract or something, I'm not sure if there is a thing like this. If there is a thing like this, I think it would make sense for parts of this deal at least to be quite transparent. But if I'm talking about our side, okay, you have a loan amount, you have a strike price, and you have a duration, I think it's perfectly reasonable if all those 3 things are open to public and those are basically transparent.
For sure.
But we cannot unanimously just disclose it. We need both parties to agree on this.
Right.
I think when you look at market making deals, it really depends on the size of the project. And to be honest, for every major properly, top 100, top 200 coin, you're generally not going to have a cabal-y thing going on. You're going to have a really tiny market maker loan where it's 0.3 to 0.5% of the tokens. You're really not having situations where people think the market price is just determined by the market maker and they just put it wherever they want. The reality is they don't even have enough tokens to barely trade a few exchanges, especially nowadays. I think the last cycle was different. We heard some crazy stories with Jump. No one here from Jump. I can talk about Jump. Kanav is not going to.
Sorry, Jump.
I think they were asking for 5% of their projects, 5 to 10%, something like that. Yeah, okay. At that point, maybe you can really do a lot more. I won't say this stuff doesn't happen. It does happen. A lot of the smaller launches, there are other market makers, not like the legit ones here. There's other ones that will do
market makers.
Yeah, it's kind of like momentum ignition type of strategies. Momentum ignition is basically somebody just creates the illusion of a lot of buying to get hyped. You want to be on top of the CoinGecko percentage charts, on top of the exchange.
Also known as market manipulation. And
market manipulation.
I've seen contracts where they write out market cap management KPIs.
Yeah, you can call it different things. You can call it momentum excitement or whatever you want to call it. Unfortunately, it works because the counterparts are retail and they're also offshore retail in many cases. So the U.S. government is not going to protect, retail in random countries. So this stuff happens. Is it a big problem? I don't know because ultimately those customers might be the same people that if they didn't have this, they would just be spinning roulette wheels and digital slots. So it's the same thing, Some of them will win and most of them will lose. However, us, we're investing our careers in crypto. We want the industry to be very credible. We would like the large launches ultimately to not have momentum ignition going on. And I think there's not as much concern right now with loan sizes. They look to me much more like NYSE kind of DMM, providing some liquidity, like nothing crazy for the big ones.
Yeah, and then I would say that a lot of times these bigger launches, it's not just a solo market maker, right? We see each other on the deals
Best
a
friends.
lot of times.
On every deal right here.
And I think there is definitely misconceptions in terms of how predatory market makers are. But to Jordy's point, there's already a lot more transparency going to this cycle for the launches this year, right? And I think the token projects are better educated. I think there is still like maybe a fair price in terms of what's the fair loan amount or the strike that can let us do our job properly and be incentivized for the upside together in that sense. But ultimately, I think there has been increased transparency and at least for the top market makers that we usually work with, there is an understanding there too. And I think people don't know that we actually do speak to each other often. So it's not like, yeah.
Yeah, thankfully a lot of the bad actors kind of got washed out in the last couple of cycles. So nature is healing. Annabelle, Jordy, Evgeny, thank you so much for coming out here and giving everyone a great conversation.
Thanks everybody for staying so late and being here.
I know.
Much appreciate it. I actually if I can end with one quick thought, because just to loop back, one thing we did talk about backstage we didn't say. One idea, this obsession with fixed supply, like Bitcoin has 21 million. For a lot of these other coins, a lot of the problem does actually come from the fact that there's a fixed supply and only so much released to TGE. This lack of elasticity and flexibility is actually causing a lot of the problems. So I just wanted to put that out there for people to think about.
Yeah.
Thank you guys so much.
Cheers.